Hermann Göring served as the supreme commander of the German Air Force until the final days of the regime. But it is a little-known fact that he was also entrusted with the task of mobilizing all sectors of the German economy for war. Launched in 1936, Göring's four-year plan aimed to transform Germany into an economically self-sufficient military power capable of fighting a major war within 4 years. The plan produced impressive statistics on paper. Billions of Reichsmarks flowed into heavy industry. Thousands of factories expanded production. Synthetic fuel output surged. Arms manufacturing reached unprecedented levels. Yet, beneath the headlines lay a deeper reality. The four-year plan was not an economic miracle. It was an extraordinary expensive system of state intervention that generated shortages, inefficiency, debt, resource misallocation, and financial instability. To understand the four-year plan, it is necessary to understand Germany's economic position in the 1930s. The country was not a resource-rich empire. Unlike the United States, Germany lacked abundant oil reserves. Unlike Britain, it lacked a global network and overseas colonies. Unlike the Soviet Union, it lacked vast deposits of strategic raw materials spread across a continental landmass. Germany's industrial economy depended heavily on imports. The First World War exposed the vulnerability of this system. The British naval blockade caused severe shortages throughout Germany. Economic warfare proved devastating. Many Nazi leaders concluded that Germany had not only lost the war militarily, but economically. This interpretation shaped future planning. Hitler repeatedly argued that Germany could never again allow itself to become dependent on foreign suppliers for critical strategic resources. Yet there was a problem. Economic self-sufficiency was extraordinarily expensive. After 1933, Nazi economic policy focused increasingly on rearmament. Military spending exploded. German defense expenditure rose from approximately 1.9 billion Reichsmarks in 1933 to more than 17 billion by 1938. This represented one of the fastest military buildups in modern history. The problem was financing. Germany lacked sufficient tax revenue to fund such spending. The government therefore relied heavily on debt. One of the most important mechanisms involved the MEFU bills, a complex financial instrument that allowed the regime to hide military spending from official budgets. Essentially, the government created off-balance sheet liabilities. The system postponed payment obligations into the future while allowing immediate military procurement. The Nazi regime appeared financially strong on the surface. In reality, it was building a mountain of debt. This growing financial pressure created urgency. Germany needed greater industrial output, more strategic resources, and increased military production. The four-year plan was designed as the solution. Hermann Göring received extraordinary authority to implement the program. Traditional market mechanisms became secondary. State planning increasingly dominated investment decisions. Government officials directed capital allocation, production targets, labor priorities, and resource distribution. The economy became progressively centralized. The logic appeared simple. If Germany could produce its own fuel, metals, and industrial inputs, foreign blockades would become irrelevant. Economic warfare would lose its power. Autarky means economic self-sufficiency. A country attempts to minimize dependence on international trade by producing everything domestically. Politicians often find the idea appealing. It promises independence. It promises security. It promises freedom from foreign pressure. However, economists generally recognize a major problem. International trade allows nations to obtain resources and products more efficiently than producing everything themselves. Autarky reverses this logic. Instead of buying resources from the lowest cost producer, governments force domestic production even when costs are dramatically higher. The result is usually lower efficiency and higher prices. Germany's four-year plan became a textbook example. Oil represented Germany's greatest strategic vulnerability. The country possessed very limited domestic petroleum reserves. Military planners knew that modern warfare depended heavily on fuel. Tanks, aircraft, trucks, ships, and industrial machinery all required enormous quantities of petroleum products. Without oil, military power collapses. Since Germany lacked natural oil supplies, the regime pursued synthetic fuel production. The process converted coal into liquid fuel. Technically, it worked. Economically, it was extremely inefficient. Synthetic fuel cost substantially more than imported petroleum. Without massive government subsidies, many facilities would have been unprofitable. Yet billions of rice marks flowed into construction and expansion. Large industrial firms received guaranteed contracts and financial support. Output increased dramatically. By 1939, synthetic fuel production covered a significant share of German fuel consumption. Political leaders celebrated the achievement. Economically, however, Germany was paying far above world market prices for energy. The nation effectively traded financial efficiency for strategic independence. The bill was enormous. Under the four-year plan, political priorities increasingly replaced market signals. Government officials determined investment decisions. Bureaucrats selected winners and losers. Industries received resources based on strategic importance rather than economic performance. This created distortions. The four-year plan nevertheless achieved remarkable mobilization. The scale was enormous. Heavy industry expanded rapidly. Steel production increased. Chemical production surged. Military manufacturing accelerated. The state directed billions of Reichsmarks into industrial development. New facilities appeared across Germany. Entire sectors grew under government sponsorship. Measured purely by mobilization scale, the program achieved substantial success. Yet scale and efficiency are not the same. A government can mobilize vast resources while still producing poor economic outcomes. The four-year plan demonstrated exactly this distinction. The Nazi economic model relied heavily on borrowing. Military expansion consumed enormous resources. Autarky projects required additional investment. The regime needed new revenue sources. Economic growth alone could not solve the problem. Military conquest increasingly appeared attractive not only strategically but financially. Occupied territories could provide resources, labor, and economic assets. This connection between debt and expansionism is often overlooked. Economic weakness helped drive aggressive foreign policy. Arms production became the dominant priority. Military procurement increasingly displaced civilian investment. Factories produced tanks instead of consumer goods. Industrial capacity shifted toward weapons manufacturing. Short-term military output increased. Long-term economic efficiency declined. This trade-off became increasingly severe. Resources devoted to military production generated limited civilian economic returns. Weapons do not create consumer prosperity. They do not increase living standards. They do not improve long-term productivity in the same way as many civilian investments. The four-year plan prioritized military readiness above economic optimization. As a result, Germany became more militarized but not necessarily more economically resilient. Estimating the total cost of the four-year plan is very difficult. The program overlapped with broader rearmament spending and state-directed industrial investment. However, modern estimates suggest that rearmament expenditures reached the equivalent of tens of billions of dollars before the outbreak of the war. Many projects generated low economic returns. They existed primarily for strategic reasons. The financial burden was immense. Taxpayers ultimately bore the cost. Future generations inherited the debt. The economy absorbed the inefficiency. The four-year plan failed because it attempted to override economic fundamentals. Germany wanted self-sufficiency without possessing sufficient natural resources. It wanted strategic independence without paying the market cost of imports. It wanted rapid military expansion without financial consequences. These objectives conflicted with economic reality. War exposed these weaknesses. Once conflict began, Germany's demand for fuel, metals, transportation capacity, and industrial output expanded dramatically. Existing shortages worsened. Logistics became increasingly strained. Supply chains faced growing pressure. Strategic resource deficits remained. The four-year plan had not created a self-sufficient economic empire. It had created a heavily subsidized and highly stressed wartime economy. As the war expanded, these weaknesses became more severe. Germany increasingly depended on conquered territories for labor, raw materials, and production capacity. This dependence revealed the ultimate failure of the original autarky vision. A truly self-sufficient economy would not require constant territorial expansion. Germany did. The four-year plan offers an important lesson for modern policymakers, investors, and economists. Economic self-sufficiency sounds attractive. In practice, it is usually expensive. Economic reality cannot be suspended by political decree. Markets can be distorted. Prices can be manipulated, but scarcity remains, and costs remain. Germany's four-year plan attempted to build an economic empire through central planning, subsidies, and forced self-sufficiency. The regime sought independence from global markets. Instead, it created one of the most expensive and inefficient economic systems of the 20th century. That remains its most important lesson today. Forced self-sufficiency is expensive, and sooner or later, someone always pays the bill. I hope you enjoyed this episode. To make sure you don't miss my future work, subscribe to my channel and press the bell notification button. Thank you for watching and see you in the next video.